Ho, 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 everybody. Merry, Merry Christmas to you and a pre-happy new year. It's the Thursday financial thing. Livestream, the final one for 2023. We'll be back, of course, in 2024, all being well. Glad to see you here, everyone. And if you're tuning in the future, a future hello and welcome to you. What are we going to do this evening? Well, I thought it'd be fun to do a little kind of recap of 2023 and an emote of what I think about the platforms that we often talk about and the ones I personally have invested in through their loans and the ones I continue to invest through. Kind of just do a roundup and show you what I think of those platforms and what they're doing right and what I think they could be doing better going into 2024. And we're going to look at a couple of sort of end of year announcements that a couple of the peer-to-peer companies have sent through, as they often do around Christmas time, and they sort of take that pause between Christmas and the end of the year. They take a bit of a holiday, so they send up Christmas roundups for the year. So we'll take a look at those. Take a quick look at the Trading 212 portfolio, last one of 2023. See how we did for the year. Actually pretty happy with it. I think the results are very positive. So if you can, subscribe to the channel. If you're not subscribed, please hit that thumbs up. Quick shout out and major thank you to our sponsor of the stream and, of course, to the Holly Cam. She is snuggling away here in this rather cooler weather that we're having. Hey, don't do that. Having some cooler weather here in Orlando at the moment. She's enjoying that. But yes, quick shout out to our sponsor, Cufflink. And up to 9.83% gross per annum, I would say. Definitely over 250 million pounds of property-backed UK investments have been made through Cufflink since 2016 with zero investor losses to date. Remember, your capital is at risk. Please don't invest unless you're prepared to lose money. This rate can change as interest rates do change. Sign up at join.cufflink.com/financial-thing. The link is in the description. Big shout out and thank you to Narinda over there and the crew at Cufflink for supporting the stream and the channel, as they have been doing for a while. And they will be on our list of peer-to-peer lenders we're going to look at today. And this, kind of do a little bit of a roundup. Quick hi to everybody who's in the stream watching live. I am trolling. Hopefully not trolling me. Welcome. Dave Dawson is here. Peter Vincent Leatherhead. Mike Powell in Southampton. Paul Bagworth. Peter Vince, as I just said, and apparently it's raining. Yes, Christmas has been was been good. I actually spent a lot of time cooking. I did think about coming back over to your end of the world, but that will be next month in January. I'll be making the trip over there. So yeah, I decided to spend Christmas here with the little pup and my other half, who you don't get to see on the stream. But yes, anyway, let's get right into it. Again, hit that thumbs up if you can. It helps the YouTube search and other people to find us. Oh, and by the way, I just wanted to just mention this because number one, I've seen quite a lot of posts about scamming. There's a lot of fraud going on out there, people. There was a interesting article on CNN over here in the US about, it was actually a pretty cool little interactive piece that they did about scamming. I'm just going to show this to you really fast because I think it's very interesting. These are the types of texts that these scammers are sending out. They're randoms, usually from women posing. They're actually mostly men posing as women. They'll send out these fake texts trying to lure people in, saying how you can make money from investments, easy money. And I do know somebody that has been caught in such a scam. Actually, 2 people for over 6 figures. Usually, they tend to prey on lonely people at this time of year, and a lot of these scammers are, they're sending out these pictures of these Asian women usually. But a lot of these scammers are in these centers in a place called Myanmar, which is bordering Thailand and China. But they've got these scam centers right here, and these are the people that are sending out, these scam texts. So just be careful. It usually involves some kind of a cryptocurrency or stock trading scam. We don't want to see anybody losing any money, even though we would think sometimes, how could anybody be so stupid? But there is people losing hundreds of thousands, if not millions, to scammers like this every day. So stay vigilant and watch out. Anyway, to a company that had a very positive year, LoanPad, they sent out an update here talking about their loan performance. This was 2023 in December. They sent this out just recently. There are currently 180 loans within the portfolio with an average loan size of $462,000. That represents on each loan 0.55% of funds invested, which gives amazing diversification. They now have 15 lending partners and a large pipeline of loans moving into 2024, which will go forward in increasing diversification even further and delivering stable returns. 2023 for LoanPad has seen a stable growth of around 10%, much of that in the last quarter. Given the general economic climate of rising interest rates and high inflation, LoanPad is very delighted with its performance, and they will continue to monitor interest rates closely into the new year. We're about to commence full testing on our new software, new technology. We are confident this will be live during the first half of 2024, although we cannot give an exact date yet. They have some updates to their terms and conditions. Update to interest servicing. As we operate a daily interest system, we want to strengthen our ability to help ensure a seamless system for our investors. Therefore, where a borrower has stopped servicing interest on a loan and we consider that there is no material risk of capital loss, we'll be able to add interest to the loan to a maximum of 55% loan to value, 5% above our initial maximum of 50% loan to value. That's an interesting change to their interest servicing. I think obviously they consider those loans at the extreme very, very, very low risk end, and that's obviously why they were doing that. And also, obviously it's saying where a borrower has stopped servicing interest on a loan, we consider there is no material risk of capital loss. To me, that would spell out that the loan is coming to an end, so probably towards the end of the loans. They're going to be sending out more email information for 2024, and they have added to the list of frequently asked questions. That is the update. Now, let's talk about Able Rate. Unfortunately, as you found out last week, we found out that Aviation and Tech Cap Limited, which is Able Rate, they are going to be going into administration. And this was a update that was sent out, I believe, the next day, the day after we got onto the stream. We didn't really have much information back then, but David Bradley Ward sent out this update with a heavy heart. Deep regret. I must share the news that Aviation and Tech Capital Limited, the owner and operator of Able Rate, is being into administration. That's supposed to say being entered into administration. Typo. This decision was not made lightly. I want to extend my heartfelt apologies to each and every one of you who supported us through thick and thin. Over the years, Able Rate has faced its share of challenges. We have strived to navigate through them while keeping the best interests of our lenders in mind. However, the recent requirement of the FCA to close our secondary market and the subsequent restriction on being able to generate new business has placed us in a precarious financial position. We wanted to express our gratitude to all of those who have been patient with us and have sent messages of support during these trying times. We are generally grateful for your understanding. It is with humility that we address concerns that have arisen regarding the aggressiveness of our recovery actions in certain cases. We want to reiterate that our primary concern has always been the protection of our lenders' investments. Given that these concerns have escalated to the Financial Ombudsman Service, we are compelled to take proactive steps to address them. The dwindling revenues, the inability to pursue new business opportunities, and the time-consuming process of addressing the Financial Ombudsman Service complaints, the escalating costs associated with recovery efforts have left us with no alternative but to place the company into administration. This decision was not made lightly, and it comes with the intention of safeguarding the interests of our lenders. Moving forward, we are committed to working closely with our administrators, Quantuma, to recover as much of the outstanding loan book as possible. Lenders who wish to participate will have the opportunity to join a lenders committee, ensuring transparency and collaboration in this crucial phase. I deeply regret not updating you all sooner. The FCA restrictions prevented us from discussing administrators until their authorization was granted. However, transparency remains a core value for us, and we believe in sharing the full story with you. Quantuma and, where they already appointed Griffin, will now take the lead in this process. Blah, blah, blah. In each loan document we will include approved correspondence from Quantama as per their request. We understand this may result in multiple emails for those invested in multiple loans. We appreciate your understanding. Correspondence will include essential information such as messages from Quantuma, draft orders, FAQs, and direct contact details for the administrators. I want to convey my deepest apologies for the situation we find ourselves in. I believe that placing the company into administration is the best course of action for our lenders. Best regards, David Bradley Ward. I had talked about Able Rate for quite a few months prior to this happening that I thought, due to the exotic nature of their loans, higher interest rate loans, obviously you could see if you were an Able Rate investor that some of those loans had gone into default. And this was kind of a natural process that I think all of us knew was going to eventually happen. It was just things had gone very quiet, and obviously this voluntary or involuntary administration had been in the works for probably several weeks, if not months. And of course, investors get upset because they want answers. And when the company goes dark and stops communicating, then people start to get very annoyed and angry. They have their money tied up in these loans, and quite rightfully so. So we get the announcement of the administration. Now this is going to get drawn out into probably a very long and expensive administration affair that we've seen many, many times with companies like Lendy, Funding Secure Money Thing, Wellesley & Co., etc., etc. Very unfortunate. I do think that David had a good idea with this business. I think that it was kind of exciting, the types of loans he was doing, but ultimately at the end of the day, really the responsibility falls on him and on the team who were approving loans that ultimately were not really good loans, and they failed and caused the company to fail. Obviously the FCA coming in and shutting down the secondary market was a big problem, as David did have big plans for this secondary market and his business. At the end of the day, if there is no money coming in from secondary market sales, there's no liquidity, no new loans are going to be written, obviously, because the previous loans were bad, not all of them, but some of them. That really spells trouble and ultimately a closure for the company. And it was very sad. There are people involved in these types of failures, and I know I've been a part of a failed business myself, and it's easy to kind of point fingers from the outside and say, well, where's our money? Come on, there are people on both sides that get affected, including the owners who've spent a lot of time and their own money creating these businesses that are not easy to create. I think sometimes we forget how difficult it is to run a lending business that is based around technology, and the kind of services that Able Rate offered were not easy to create, and they had spent a lot of time and money creating that for us. On the other side of things, we put in money and probably going to lose some of that money, and that's unfortunate. So nobody is a real winner out of this. The people that win are the borrowers that default, and who knows what they do with that money that they have borrowed. Those people are ultimately, I think, the ones that end up the best in these situations, but it's very unfortunate. And I do hope that, there will be some kind of recovery, and that there's a good company taking care of the administration, so we will get updates. I had pulled out most of my funds out of this company, out of AbleRate, a long time ago, because, again, after I sort of saw the writing on the wall on these exotic loans, I just didn't have the greatest feelings about it. So hopefully you guys didn't have too much money invested in a company or in the loans that AbleRate was offering. If you did, be patient. We'll see what happens. Continuing on, we got a Landy administration update full of good news for this Christmas. I don't really want to pay too much attention to this because it makes me depressed. But a couple of, I think, important points here. Interim distributions to investors during the first 48 months of administration, $21.4 million. Net realizations into the client account during that reporting period of $10.4 million. Unfortunately, these fees for these administrators tend to really just balloon, as we are seeing with this one. By the way, if you haven't withdrawn your funds or been through the AML, anti-money laundering process, go do that so you can get your money out of there, because there is some money still sitting in Landy's hands that needs to be paid out to investors. Here's the fees, the things that we don't like to see. Fee estimates. Approved to date, £2.4 million of fees. And then right now we've got even more fees that have been requested and estimated, resulting it's about another 1.6 million not paid out yet. Those are going through the committee and the courts. So Merry Christmas, Landy. Thanks for that. Capital Stackers news. If you are invested through Capital Stackers, I think the most important thing that I saw on this update was this minimum investment. Many of you may have missed this little nugget. This is what Capital Stackers wrote. Since there was no great fanfare, but we recently reduced the minimum secondary market investment from £2,500 to £500. That's good news. The rationale behind this move is to reduce the likelihood of you having £2,499 and 99p trapped in your ISA wallet and being unable to deploy these funds due to the minimum investment threshold. It will also give smaller investors more scope to diversify. I know that was one of the biggest gripes about Capital Stackers, is the £2,500 minimum that it takes to get invested. So now you're going to be able to use £500 and higher investments inside the secondary market if you can find anything available. So I think that is a good piece of news. Let's go ahead. By the way, people have said, well, I can get on the AbleRate website. I have not been able to. I've tried to get on AbleRate's website, and for me, it's just not coming up. I do wonder if people are clicking on a saved cookie history on their computer and they're not actually accessing it live. But if you're able to get into AbleRate, tell me why I can't, because I just don't understand it. Okay, let us hang on one second. I'm going to pull up. Just bear with me for a second. For some reason I don't have it pulled up here yet, but I'm going to pull up my emote of 2023 and what I think about the peer-to-peer lending companies that I have invested through, and the ones that have gone out of business, the ones that are still in business. One second. I need to log in as a different person because this one is not the right one. Why is this not working? Bear with me. I'm almost there. But Yeah, I'm going to kind of run through. You know what? Let me go through the trading 212 real quick while I log in the background so you can see what's going on with that. Hang on. The wonders of live presentations, right? See, this is live. This is to prove. This is to prove that things are live. There we go. Okay, let me show you the trading 212 and I'll show you this, what I think about the companies this year. We are generally doing pretty well with the portfolio, 19,441 pounds. So imagine we've clawed all the way back from sometimes 16,000, high 16,000s, right back to 19,000. So obviously, the stock market has had a good run over the last 2 or 3 months, and this has really helped the portfolio. I'll be able to make a donation to my 2 charities before the end of the year. So 10% of what we've made through 2023. I'll give you an update to exactly how much that is, because I don't know off the top of my head. I have to go back and figure out from January 1st. But what the starting balance was and what we are at now, hopefully there is a decent amount that we can go ahead and give to those 2 charities, Forest Home in Dorset, the hospice care, and also Dr. Paula's Worldwide Healing Hands in California. We support her mission trips. If you haven't checked out her charity, go check it out. It's an excellent charity. But how are we finishing for the last live stream? 20% down in Alibaba, where we started at. 364 pound loss. Coinbase has been really, really good to us. We're up almost 50% on this. Of course, there's always that regret for not putting in more, but that comes along with the risk and reward. You don't want to take too much risk on any single stock. Creative Realities has clawed back, which was very much down. You can see how much it dropped. We got in at 286, which was right here. And then, of course, as soon as we get in, you see this dump all the way down to 138, but now we're back to 240. So a very risky stock. Trading 212 did me a big favor by not letting me put more than, I think it was 350 pounds in there. Deutsche Bank up 12.94%, so nice to see a bit of a rebound. I'm surprised about this Flex natural gas, 6.56%. We've seen a big fall off of Flex. Also, we're up here at $35. Now we're down to 29. So we bought down here at 27.61. So a little bit of a profit, not great. Green Power, we've lost 295 pounds at 27% loss. Again, we didn't have a huge amount invested in there, but still a loss. Norwegian Cruise Lines up 12.62% for a 224 pound profit. Rivian Automotive also been good to us. We haven't been in this share position for very long. 468 pound profit for 39%. And then Vermilion Energy, which has been good to the portfolio in the past, but this run has not been very good. What happened was sold out of Vermilion and then re-entered. I think we took quite a bit of profit on that one, but right now we're down 637 pounds on the second run, which is a 39% loss. So yeah, 2 shining stars. See Coinbase, seeing this big run up on crypto right now with this pending ETF decision, which will happen in January, which is fully expected to be green lighted. But of course, who knows about that? If we see these American companies like Fidelity and also the giant BlackRock and ARK and Grayscale all get their ETFs approved, then the price of crypto is expected to go up, especially Bitcoin and Ethereum, which will in turn lead to Coinbase's share price probably rising because of more usage and institutional usage of Coinbase. So yeah, portfolio, pretty happy with it. Would have been nice to hit that 20,000 pound mark, which is the goal for this year, but this is very close to as high as the portfolio has ever been valued. So we really did claw back all the way to the close to the all-time high. Who knows what will happen in 2024? Nobody, and I mean nobody, can predict what stocks are going to do. You should certainly never listen to anybody when it comes to stock price predictions, especially not anybody online like myself, because we really have no idea. We have no idea at all where these stock prices are going. I have no clue. I take my best guess on what information I have in front of me. You can look at company profits, cash flow, debt, all of that stuff, try to be a predictor. But at the end of the day, stocks and shares, the prices run off sentiment. And if people's sentiment is good about a stock, that price can go up. If it's bad and generally negative, the price can go down, even though the fundamentals are good on the numbers for these companies. So, that's we do our best, but obviously there is no guarantee. Anyway, on to the main part of what we're going to talk about today, and peer-to-peer lending company emotes, I call this. This is the 2023 summary. It just goes in alphabetical order. There is no favorites here or unfavorites on the list. Well, actually, I take that back. There is some favorites for sure, but the way it's laid out from start to finish is just alphabetically. So let's hit the first one. And on each company, there is an emote or an emoji from the iPhone selection showing how I kind of feel about the company's performance in 2023 and my general feelings about the company. And I'll explain why. Let's go to our first one. Here we go, Able Rate. Despite me only having a small amount invested, I feel for some of you out there who have larger amounts and probably have been pretty frustrated by Able Rate over the last year, especially watching those defaults. So that is my angry emoji. Of course, these are all negatives for Able Rate. We don't really have too much positive to say. We've got defaulted loans. We've got formally entered into administration through Quantuma and Griffin. And really, I would say a lack of communication for retail investors before that main notification was sent out last week. I think one thing positive that you could say about Able Rate is that the company did formally enter administration. I think it was probably worse in voluntary wind down because it was never looking good at that point anyway. So at least it's in the hands of the professionals now, and they can try to chase up these defaulted loans and see if they can get some kind of recovery back. So I think this negative could also be a slash positive, but it's a very small positive, and I'm scratching out a way to look at this in a positive situation. Moving on. Assets Capital. They're also getting my little angry face because that company has just been a bit of a poo show for the last couple of years or more. We've got an increase in management fees. We saw that kind of ridiculous 3 months, over 6% management fee that they decided to implement. Seems like Assets Capital just goes ahead and changes the fees whenever they feel like they need to, or because they can do it. Obviously pissing off investors. We have a lack of communication for retail investors too. They do send out, I believe, quarterly updates, but it doesn't seem like enough to me. We kind of feel a little bit in the dark. I'd like to see more increased communication through Assets Capital. I would like to have Stuart Law come on the stream, but he doesn't seem to be replying to me at the moment. We'll keep trying. And then, of course, we've got Assets Capital mounting default loans on these small and medium businesses that they've lent money to. Moving on, Collateral. Look at that. It's just a poo fest for them. That's probably been the worst one out of all of them, which is generally just a fraud case. And you can see the Curry brothers here in jail, or they will be coming up soon. But not a great, outcome for Collateral. Definitely a bunch of smelly poo around them. Not really much to explain other than that they were both convicted of fraud. They pulled out money out of the company when they knew things were going bad. And God knows what else that we never got to really know about behind the scenes. But operating under the guise of being FCA authorized and turning out not to be. and writing a bunch of bad loans and basically stealing money. So yes, Curry Brothers, I'm talking about you. And I don't think the amount of years that you're going to get really fits the crime. You're getting a very light punishment for what you did. Stealing, I think, is pretty terrible. There are worse things in the world than stealing, but stealing from people is, in my book, a pretty nasty crime that you got off pretty lightly for. Let's look at crowd property. Okay, well, I created my own emoji. This emoji, which is a inspection emoji, comes with a down face, a sad face, but I've given it sort of a more happy face because generally I've been pretty happy with crowd property in general. They've increased their investor rates throughout this year as interest rates have gone up. They have a good deal flow. People do complain that if you're trying to do manual investing, you can't get pieces of the loans. That would be kind of a negative, but I've seen a good amount of deal flow. Two of my negative things I would say about crowd property is that right now 30% of my loan portfolio is overdue by 6 months or more, some of it over 12 months. And that is not great. And the reason why I use this little magnifying glass is because really just keeping an eye on crowd property in this default situation to make sure that those loans are being chased up and adequately handled, which I would hope that they are now. Every lending company that does property is going to have defaults and loans that run overdue, usually several months, so it's not unusual. However, it is important as an investor to really keep an eye on these companies and make sure that they are doing the right thing by their investors and they are handling the loans appropriately. With crowd property, one of my biggest gripes about them is I find the website to be not the most user-friendly. I don't like the user interface, aka the UI. I find it a little bit confusing. Sometimes I'm digging around trying to find things on the website and I don't find them. So yeah, that's crowd property. They get my inspection with a somewhat of a happy face. Next, we got Cufflink. Generally smiling with Cufflink. Been pretty happy with them. The returns have been good. They've got good deal flow. They've increased their investor rates. They have good communication and loan updates, which I like on the website. And I think their default recovery, they are one of the companies that tends to really take action quickly. They don't tend to, slack on things from that side of things. One of the things I would put as a negative for Cufflink would that be their higher default rates, which is the FCA of definition of over 6 months past due. Then in 2022, again, this is always something that we have to watch out for in peer-to-peer lending property situations because, default rates are not good. We don't want to see a lot of default rates. Let me show you what's going on in Cufflink statistics because I think it's important again. Cufflink is a sponsor of the stream, but I also bring you the real lowdown of what I think about the company. I'm not just going to say everything's good just because they sponsor the stream when we have to look at these default numbers. So if we go to the statistics page, we can see that they've increased their lending over the years, which is really good. This is what we don't like to see. Down here in the FCA's default definition, this is loans that are past the contractual payment date of more than 180 days, which is 6 calendar months. We can see this has gone up in 2023. It blended, so we take into account the risk levels A, B, and C. You can see B has gone up from 0 in 2022 to 11.48%, and A level loans 6.83% from 0% in 2022. And as a blend, 8.77% in 2023 from 0. Now, again, one of the natures of the FCA's definition is past the contractual payment date of the gross loan. Yeah, I'm confused what I'm trying to say here. What I'm trying to say is the FCA default definition and what cufflink default definition means are two different things. So default in cufflink's view is a loan is in default when it's one calendar month past a missed payment where a payment is outstanding. So after 1 month, they consider that, if they haven't got a payment after 1 month, it is then considered default. Now, if we look at those blended rates again, for the default of 2023, down here at 16.18% now from 8.79%. So that's been a 50% jump up for Cufflink. Almost as high on the A rated as on the B rated. So C rated, not so many of those loans around, if any, right now. But 16.93% in the B rated as Cufflink's 1 month past due on default. So again, something that we have to pay attention to because I think it is important. We want to make sure that we pay attention to these default levels no matter what the company is. And if we see any signs of trouble, we have to take action to protect investments. But other than that, I think Cufflink has been doing a good job this year. Hopefully they can get those default levels under control for 2024. Because you would certainly not want to see them increasing. Moving on, LendingWorks. I gave them a cool smiley face because while LendingWorks was certainly not my favorite peer-to-peer lending company, due to the shenanigans they pulled during COVID and basically lack of interest, they did pay everybody back. They paid all investors back in 2023 through Fluoro and shut their doors to retail peer-to-peer lending. So I would say, what more do you want? Really, repaid investors. That is pretty much all you would want as an investor, is to get out of there cleanly. Yes, you didn't make as much interest as you're probably expecting to make, certainly, but any time that we can come out of a wind-up situation where the company is closing down their retail side, and anytime we can get out with full payment, 100%, I would say that is a cool face. Moving on, LoanPad. I gave him my party face because LoanPad has been, I think, one of the steadiest peer-to-peer lending platforms out there, if not the steadiest. Not the highest of rates. You can get 6.5% on the 60-day notice account, 5.5% on the easy access. But it's not easy access, but it has been because the liquidity has been there, but that's certainly not guaranteed. What do I like about LoanPad? Well, 15 lending partners they've added, I think 3 just this year. And they have increased the interest rates as interest rates have risen now. They are, I would say, competitive. The investment continues to do what it says on the tin. It's very simple. You just put your money in. You get paid daily interest. They haven't tried to change what they do. They offer the same thing that they've always been offering. They've offered brilliant liquidity. Being able to access your money in less than 1 day has been constant even through the pandemic, so that's really great. What I would like to see as a negative, obviously this £10 minimum is still there. You cannot put your money to work unless you reach £10 in interest. Likely when this software update goes live within, I would say, the next 6 months, you're going to see that go down from £10, which is really the only gripe that I have at the moment with LoanPad. So generally, a party face for them. Lendy, funding secure money thing, you guys all get put into the same category. I don't want to harp too much on those 3 companies because they've just, huff and puff, right? It's in administration, the fees continue to rise. Money thing, I have no idea what's really going on with them. But it's just not been good. So they get my huff and puff face. I kind of written those off as I'm going to get a little bit of money back, maybe 15% on average, but most of those are going to be tax write-offs. Property Moose, UK Diversified Property, aka Property Moose. I haven't really talked about them for a long time because Property Moose was a company that originally started out as fractional shares in rental properties. So you would, Property Moose would acquire properties, you would buy a share, and supposedly supposed to receive dividend interest on the rental payments, very similar to HouseCrowd, who, by the way, I didn't do them because I totally forgot. But I'll put HouseCrowd in the, they can go in there too. HouseCrowd can go in there. But yeah, basically then Property Moose decided, well, we can't continue to operate this way financially. This isn't going to work. So they turned their business into UKDP and made it into a fund of all these rental properties that they owned. Everybody was issued shares. You were offered a chance to exit. At that point, for a discount, you were going to take a haircut. And a lot of people exited out when it was offered as a possibility. And then they went ahead and re-offered that again later on. The first one I declined to exit out of because I just didn't feel like taking that much of a haircut on my original investment. I thought I would just roll the dice on it. But the second time it was offered, there wasn't really much upside to staying in the investment at that point. I think they offered 30%. And with the possibility if you held on, you might get 40% of your money back out. I said, I'll take a tax loss and I could do something else with that money. So I took a haircut. Not a good investment in the end of the day, but this is the nature of investing. Some things work out, some things don't. The Property Moose one didn't work out. I'm pretty disappointed with UKDP. You can't get on their website right now, even just to get a statement, and it just doesn't seem to work. So that's not good. I think they have a very, very small, if maybe only one or two people even running that business, as they try to liquidate their rental properties. And I think they're just trying to get all the money back so they can shut this thing down and maybe move forward from there. Property Partner, LHS. I'm giving them my eye rolls. Is another company that I think is, it just doesn't look good for Property Partner. I've said that for many years, that I don't think there's really good outlook. The share prices have generally fallen, and there's not much liquidity on the platform. What they're doing is, again, they're trying to liquidate a lot of the properties that they're holding. They have mortgages. It's the biggest con that I always wrote about Property Partner when I did the review many years ago was taking on debt to finance these properties was a really bad idea. They had up to 50% of the property value in mortgages, and that was a severe risk. Well, that happened to really bite them in the rear end as property interest rates continue to rise and mortgage and borrowing rates rose. Well, the expenses of carrying these big properties, and these were multi-unit flats and student housing and stuff like that, those costs rose when the interest rates rose, and then the company really took a hit. I'm just not really seeing what their future is. I see no new business being written. Right now, they're just liquidating based on shareholders voting on properties when they hit the 5 years. You vote, do you want to sell, do you want to keep? I generally see most of them being voted to sell, and the properties get put on the market. It's a tough time to sell property right now, so I don't know what's going to happen with them, but right now they seem to be continuing to operate. So yeah, I give them my eye roll. Yeah. Unbolted, I give them a smiley face. I think Unbolted has been doing a pretty good job. They continue to really stick to what they know, which my dad always told me was a very, very important thing to do. So you stick to what you know. And I think Unbolted has been continuing to do that by mainly offering, they mainly have been offering pawn shop type loans on gold, jewelry, and valuables. I like that pawnbroking model. It's a model I understand myself with some experience in it. They have less cash drag for the lower pound investors, so meaning that if you have a smaller balance in your account, you're not seeing as much cash drag on lending as you would if you were holding a large balance of cash in your account. So obviously these loans are smaller, so there's only a certain amount of loan capital that can be invested. If you're holding 50,000 in there, you're probably not going to get much of your money deployed into lending. So, but if you're a person that has 1,000 or a couple of grand in there, you're going to see that money get deployed. There's a constant rotation of cash due to the shorter term nature of loans. So loans can be 1 month, 2 month, 3 month, 4 months. So you're going to see that turnover of money. If you need to get money out, you want to get your income, you can do that. One negative about them is they're involved in this court litigation with a problematic borrower who is a lawyer, a solicitor, and who specializes in litigation. And this borrower owes, I think now over £220,000 of base borrowing money plus fees, which with the fees, I'm imagining is now double of what he owes, but he continues to create problems for Unbolted, and they are legally having to fight that in court. I did see our Mouse in the Court blog that we often read for information saying that there will be a trial. So this court is actually going to go to trial between the 21st of October and the 28th of February 2025. So yeah, this is going to go to trial. If I had to make a prediction, I'd say Unbolted is absolutely going to win this one. I just don't know really what his argument is and whether he's going to get this one through or not. But if he does lose, he's going to be hit with some pretty big court fines, and who knows what happens to him after that. Somebody like that could quite easily go bankrupt and not pay back Unbolted. So that is one of the negatives. As far as pawnbroking goes, Financial Times had an article about pawnbroking hitting record levels in Britain because of high inflation and a shortage of borrowing alternatives. So that bodes well for Unbolted. Just wanted to show you, how much interest Unbolted charges. It's kind of a crazy amount. So if you want to borrow £400, you're going to pay 67% a year in interest. So £400 is going to have you paying £517 in interest. So obviously a very profitable business. The more you borrow, the APR starts to drop. But even the highest borrowers of, say, 50,000 is going to pay 40% a year. So it's a very high interest rate environment, very profitable. So there's a lot of money there. This is the list of loans that this borrower has defaulted on, so you can see just how far back this goes. April 2019. This is the one that's going to trial. Some of those amounts, 50,000. It's a £28,000 loan, and that's not including the fees. So if we look at that, I don't know if it's going to let me do it. It might make me log in. But if we look at how much fees have been added to the 51K, you can even see here loan balance, outstanding. Hang on. Here you go. So this is a £51,000 loan balance, current price of the loan. So the borrower got 36 grand, and the total outstanding balance, including fees, is now 79,249. So just a ton of fees being added, and this is all the loans that this person owes. So I'd say aside of Unbolted having that one, I would say black sheep of loans, they seem to be doing okay. Hopefully they can get that one sorted out, because it seems to be a good business to be in, pawnbroking in general. So let's just have another look. The Trading 2 portfolio hasn't really changed too much since the last time we looked at it. So I'd say in general, we kind of have that case scenario where the good companies still continue to hopefully do good in 2024, and the ones that we've disliked are sort of getting washed out. That's going to come with some losses, but that is the nature and risk of investing. Remember, this is not a bank secured savings account. You're trying to get more interest than banks are going to pay you, which is about 4%, 4.5% nowadays. If we're trying to get 8-9%, we are going to take risks within peer-to-peer lending. So please don't forget that. You never get any rewards without taking some risk. Just like in stocks that you can lose money. It's just the way it is. Anyway, I think that's all I got for you for this year. I hope you've enjoyed the content. And if there's anything that you would like to see, I'm doing my best to work on getting guests here for the next couple of months in January and February. I'm going to see you in 2024, each and every one of you. I'm happy that you are being here. Let me see if there's any interesting comments. Peter's asking how my mother is doing. Thank you, Peter. That's very, very kind. She's all right. She has been placed into a nursing care facility in Dorset, and she's very comfortable. So, so far, so good. I'm trolling. I think I'm going to going with crowd property as my first peer-to-peer. The developments seem to get funded mega quick, which is a good sign. Yeah, just remember you really to be safe. You want to have some diversification. I would recommend at least 4 peer-to-peer companies. Take your money and split it up if you can. I think you got to have a risk of higher risk and lower risk is important, but that's just my advice. You can go to financialthing.com and read reviews on these companies, get some information. Yeah, loans do run out. Peter says, I wonder if you being in the US is preventing you from logging into AbleRate. Possibly. I'll try a VPN. Hi, Jeff from France. Bonjour. I don't know how to say Happy New Year in French. Stephen Hale is here in Nottingham. Hi, Stephen. I'm hoping next year we can split our ISAs up amongst many peer-to-peer lending companies, which has always been a deterrent for me. Yeah, hopefully that will come with the ISA changes. That'll be nice. Trolling. Easy Money is the name of a peer-to-peer lending company. No, I think you're confused saying easy money doesn't exist, meaning money doesn't come easily. That's true. Lionfish hunting is here. She's been cleaning the pool. It's cold. Minus 24 degrees or 24 degrees? Yeah, it was a joke. John Day is here. Welcome, John. Merry Christmas to you. Yeah, that was I did forget to put that down as a negative with Cufflink. You're right. The change to £500 minimum loans is definitely a big negative. Yeah, it didn't used to be that way, and I think that's going to stop a lot of smaller money investors continuing on. How you doing, Crazy Cash Pap? Nice to see you. Merry Christmas. Just increase unbolted allocation. Clunky website, good performance, and increasing consumer demand. Definitely agree with you. I think that website is a lot to be desired. One thing I do like about crowd property, if you look on your account, it actually tells you how much money you can expect in the next X amount of time. So I think that's cool. Loan pads interest rates 6.5% on a 60-day access, 5.5% on classic, which has been liquidity that you could access within a day. Yeah, I think and obviously I didn't cover every peer-to-peer lending company because we'd be here for hours, but those are just the ones that I personally have invested through. There are other good peer-to-peer lending companies I think are operating in the space, but I don't, I didn't cover those today, but we've got PropLend, Blend Network, Capital Stackers, I think are doing good jobs. So there's other ones out there if you want to research them and look into them, but I just talk about the ones I personally put my own money into because I can really get in and see what they're doing. Anyway, I'm going to get out of here. Happy New Year to everybody. I hope you have a wonderful time, whatever you're doing. Be safe out there. And thank you so much to everybody that is a Patreon supporter. Some of you have been supporting Patreon now for tons of time, and I very much appreciate it. It goes to help with running the costs of the streaming software and the hosting of the website, just general expenses. It's definitely not a break-even thing. I always operate in the red, but I do this out of love. I don't do it for the money. It's always been a red operation. But so thank you to everybody who subscribes through Patreon. If you want to subscribe and become a Patreon supporter for as little as a cup of coffee once a month, check the link down below. And I will see you in 2024. Next Thursday, we'll be back. And yeah, that's all I got for you. So again, happy holidays, Merry Christmas, all that good stuff. Happy New Year. We'll see you in 2024. That from myself and Harley. It's been a great 2023 and wonderful that you guys come here every month, every week to watch Harley sleep and listen to me waffle on about investing. But all the best, and I will see you next week. Take care. Bye.